Hello traders and welcome to the market opening preview on a Tuesday, September 8th, 2015. For those of you in the United States, welcome back to trading on a new week. Good to have you back, New York. All right, so New York Stock Exchange should be open today. Everybody should be back to work. All the summer vacations should be over and I'm expecting a full market today. Traders, always remember this is brought to you through FXCL Excellence in Trading. Please visit us at fxclearing.com for your trading solutions. All right, traders, we've got a lot to talk about today. Got some 6 currency pairs we're going to look at for some trade plans. And got a little bit of news that came out. Really nothing happened with that news. And we'll get to that in just a minute. Let me introduce myself to you. My name is William Gilday. I'm your moderator for the market opening preview series every single trading day before the London Open. Traders, I will tell you that I do record this during the Asia session. Traders, I started trading in the year of 2006, 2008. I retired from a 27-year career as a firefighter paramedic out of the great state of Florida. Traders, came to Thailand for a 3-month holiday. Well, it's 8 years later and I'm still here and I'm still trading Forex and having a great time. It's just wonderful living in paradise. Sitting at my desk, looking at the Gulf of Thailand. Beautiful day today. Blue skies. Absolutely gorgeous. Traders, my trading style is really very simple. It's not complicated at all. I'm looking for opportunities and probabilities on my side to enter trades to be successful. And that's through chart analysis, fundamentals. And, you know, you can't just be a technical trader anymore, or you can't just be a fundamental trader anymore. You have to be both. 3 years ago, if you would have asked me that, I would have said, no way, I'm a technical trader. You have got to understand fundamentals. Read a great book this weekend, absolutely awesome book on trading. Really some good stuff. All right, traders, let's move along. That's enough about me. Here's our risk disclaimer. Forex trading has a large potential rewards, but also a large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Most importantly, traders, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. In other words, when you go from a demo account to a live account, you will see a change in your account and the way you trade. Because that thing between your 2 ears gets in the way. It's called the mind and greed. We all go through it, and we still do today. All right, talk about some news. Let's talk about how Friday ended, as New York was closed yesterday. But basically, all the indices in the New York session, except for the VIX, was all in the red. US 30, S&P 500, the NASDAQ, small cap 2000, all absolutely in the red. Let's move over to the Eurozone. As they were up and running yesterday, the DAX closed 0.70 in the green. The FTSE 100 was in the green at 0.52%. The CAC 40 was in the green at 0.59%, with the Eurostoxx 50 out of Frankfurt at 0.56%. Traders, let's take a look at Asia. Remember that these countries are currently trading. The Nikkei 225 out of Tokyo is negative 0.76%. The S&P ASX 200 out of Australia is positive 0.96%. The Shanghai is negative 0.13%. And the Hang Seng is positive 0.25%. And the Kospi out of Seoul is negative 0.21%. So that is what is going on, my friends. So let's see what's going on as far as, well, let's see what we got. We had some data in Asia today. We had the Aussie actually had some data come out. Really not a big market mover. Really didn't do anything, to be honest with you. I think it moved like 10 pips and that was it. And that was NAB Business Survey. So previous was 6 and it came in at 11 and there was no forecast. So we have China trade balance at some time during the day. You know, they don't give you a time. It says tentative. To my knowledge, that data has not come out yet. To my knowledge, that data has not come out yet. So we are okay with that. And in the London session today, it is, to believe it or not, very quiet. We are quiet all the way through the New York session. So it's pretty much a technical day today. Not a lot of stuff to get the markets moving, but I expect volatility to pick up. Summer vacations are over, and traders are back to the desk. All the big hedge funders should be back to their desks today. Not that they'll be trading. They'll probably be looking and analyzing. But it should be good that they should, like I said, be back to their desks, and we should be back to regular market volume very shortly, and that's a good thing. Glad to see that. Glad the summer months are over. We have a good 3 months of good, strong trading ahead of us, which I'm excited about. We need to make some profits and build our accounts. Can't live on looking at screens and not hitting the button. You got to hit the button, but you got to be smart about it. All right, that's my commentary for today. I think we have a good week ahead. We've got some good charts today. A lot of charts are in a range, as yesterday New York was closed, and you can see that my support and resistance lines are pretty tight together. So we're going to have to do some breakout trading and a little bit of pullbacking for things to get started, or else we're not going to be in any trades. I'd just be careful on your entries. Make sure you have confirmation and all that good stuff. 30-minute charts. That means every single candlestick on this chart is 30 minutes in duration. You can see where we're blocked in this range with the daily pivot point and then this resistance line above it. So, we can take this at any time now. This euro dollar is, if you get a bearish candlestick, you can take it. I would rather wait to get below the daily pivot, but I'm not typically worried about it. I know there's a lot of price action to the left, but that is what I call unauthorized price action. The only reason that price action is like that is because New York was closed, so everything went sideways for 12 hours. So we will ignore basically the daily pivot point today, because you got to look at today as like a Monday. So once I get a bearish candlestick formation and I get confirmation, I'll take the euro to the short side. I have no intentions of buying the euro, folks. If you look at the higher time frames, and I'm really pushing this now, this higher time frame issue about getting trades and looking at higher time frames for confirmation. You have to look at higher time frames and mark your charts. The charts are your friends. If you don't like what charts you're using, change them. Your charts you've got to be comfortable with your charts, and you've got to be able to do anything you want to do with those charts, and you just have to love your charts, and that's what it's all about. All right, let's take a look at the pound. Enough of that soapbox. All right, here it looks like this could be a flag. This could be a wedge, however you want to look at it. Anyhow, it's to the downside. We want to take the pound dollar to the downside. I'm bearish in this. At 52.65, I'd like to take it down. I'd like to see it break the trend line there, or the 200, get below the 200. I'd rather take it right below the trend line myself and take it down from there and just take it bearish. This way, by the time we get to the 200, we should be break even or pretty close to it, and if we get a bounce, there's no big deal. By the time we get down to the daily pivot, I did mark it, just so you know it's there. The daily pivot point is there, and you know it's there, and you expect a bounce there, but we're looking to take profit at 52.12, which is at our support line, and it's right above the S1 pivot. So, I think this is a pretty good trade plan if this continues to be bearish. That's the big if, right? Well, the reason that we're up this high is because of NFP from last Friday. So, we're still in this NFP mode, and like I said, traders in the U.S. didn't trade yesterday. Their markets were closed, so they're now reacting to price action that happened on Friday, basically after the close of the New York market. All right, so the Aussie dollar, the only thing I want to do with the Aussie is sell it. It's in a perfect spot. We're at resistance. We're at the R1 pivot at 0.6946. We want to take down as 0.6922. I know that's only like a 24 pip trade, but that doesn't mean that I have to get out at that point. That's just like an area where you want to be alert to that that's going to be a support area hopefully we'll get through that. I don't like taking trades at 22 pips. Okay, that's really risky. I like trades with 40, 50, 60 pips in it. Now, I just might take 20 or 25 pips for profit, but I like trades that give me 50 pips, 40 pips, 35 pips. So I have some breathing room. This really doesn't have a lot of breathing room. You know, if you're going to enter this, you got to be right on it. So we'll keep an eye on that. We did have data, like I told you, in Asia this morning out of the Aussie, and it really didn't do anything. So this chart is valid. Let's take a look at the Euro Aussie. The Euro Aussie's been in this sideways price action for quite a while. I'm bullish in the Euro Aussie, and I'd like to see this really pull back either to the support line or to the 200 exponential moving average. I got it at 1.60, you know, 60.10, 60.15, somewhere there, and take this back to the upside. But this pair, if you look at the higher time frames, is absolutely bullish. You can't take it here. You don't have enough pips. You're gonna hit resistance. You're gonna get whacked, and we've got to get out of this nasty range. And you're gonna see this in probably all the pairs. We're in this range, and we have to get out of these ranges. And you know, I'm not a breakout trader myself. I'd rather it break out and then do something. You know what I mean? And then get into the trade. Breakouts too many times can be false breakouts. All right, let's take a look at the Euro Yen. Here's the Euro Yen. Look at this tight range we're in. You know, really difficult. The Euro Yen is bearish, folks. Take a look at the 4-hour chart, the daily chart. You know, you'll see that this is bearish. So I want this to clear this daily pivot point. Give me a bearish candlestick formation, and we can take this right on down there to the S2 pivot at 132.33, which is fine with me. You know, that's close to a 40 pip trade. I'm good with that, but I sure wouldn't sell it from this price level right here, because I think you're going to get a significant bounce here. This has been in this range for a long time, so I'd like to clear this range. And believe it or not, if you look left of the chart, once we clear that daily pivot, we basically have a wide open space there. It's nice trading. Nothing to worry about below, you know. Just take it down to support and get out. Let's take a look at the New Zealand dollar. The New Zealand dollar is the same thing. Listen, all I want to do with the New Zealand dollar is sell it, folks. All I want to do is sell it. If you want to counter trend trade this up to the 38.2 Fibonacci level at 0.6309, that is fine. However, I just want to sell this, but I need a pullback. I don't have enough pips here to take a short trade here and make any kind of pips. So either it needs to get to the all one, which I don't have a problem with at 62.85, or get to the 38.2 at 63.09. But remember, traders, all we want to do is sell the New Zealand dollar. The dollar is a lot stronger than the Kiwi. So we want to sell this, sell this, sell this. Like I said, you know, you can scalp this up to those levels if you wish to do that. I don't think there's anything wrong with that. But the main objective is to sell this. And that wraps up our 6 currency pairs. I can't emphasize enough about looking at higher time frames and correlating your charts with higher time frames. I don't trade off of these charts on my live account, but if you saw my live account, a chart of my live account, you would see that I have a bunch of lines on my charts, support, resistance, and you know, channels and all this stuff, and they're all color coded. So I have everything color coded for the daily chart, the 4-hour chart, the 1-hour chart, and the 30-minute chart. So if I have a line on my chart, it goes, say, the pound dollar. If I move over to a 1-hour chart, I still see the levels that I put on from a daily chart or a 30-minute chart all on that chart. And this way I know where those levels came from. So I color code my trend lines and my whatever I put on my charts. I color code it to the time frame that I'm in. And it's not a bad idea to do. This way you know where that came from. And you could always go back to that time frame and see why. Alright, that's enough out of me for today. Traders, on behalf of myself, William Gilday, and FXCL Excellence in Trading, I want to thank you for joining me today on this beautiful Tuesday, September 8th, 2015. Traders, please come visit us at fxclearing.com for your trading solutions. Traders, until next time, have a great trading day and grab those pips. Take care, traders. Bye-bye now. See ya.